In this video, we're going to look at how to fill out the Paycheck Protection Loan Forgiveness Application, the SBA Form 3508EZ. Now, before we do a deep dive, the reason why we kept delaying on doing this presentation is that in Congress, there kept being proposals that any kind of debt forgiveness on a PPP loan under $150,000, they were just going to forgive it. Well, legislation-wise, that hasn't happened. And the reason for doing it now is that we're at the 24-week period this week of the debt forgiveness. And so banks are starting to take applications now. So to kind of give you a timeline is that if you got a loan, a PPP loan in April, we're now at the 24-week period to make the application for debt forgiveness. And I've got a lot of clients, they want to know the scorecard. They want this over with. And we don't know if legislation is going to happen. So we decided with the most recent update of the 3508EZ that we're going to go ahead and do this presentation. So what does it mean for an EZ? What happens is that it's a very short form. If you kind of look here on the screen, you will see it's a one-page application. It's very straightforward. We did an earlier video on the first form that came out when there was no EZ, and the form and instructions was like 11 pages. So how do I qualify for this EZ form, this one-page form? And first, if I'm a subcontractor, I'm a Schedule C, I'm a sole proprietor, I have no employees. If I am that, this form is all I need, and I'm done. I can apply for this, and with my financial institution, and my debt should be forgiven as long as I've spent the right kind of money. So to kind of restate that is that if I have no employees, then I don't have to worry about in a minute when we talk about FTE, full-time equivalents. And as such, then if I spent my money, then I'm okay. If I spent my money on paying myself, I spent my money on interest, mortgage interest, rent, utilities, and qualified expenses, I would be done. The other way to qualify for it is if I do have employees, I did not reduce my FTEs or my full-time equivalents. For example, at my office, we had the same number of employees, including full and part-time, on the day we got the loan as at the 8-week period, which was the original bill, and at the 24-week period, which was a law passed effective on June 5th. Then the other requirement, you cannot reduce wages by more than 25%. So just as a 30,000 foot example, in my office, we had the same FTEs on the day of the loan. At 8 weeks, we had the same FTEs. At 24 weeks, we had the same FTEs because we kept everybody on full time. And at that point in time, I've met that requirement. And in my case, no employees got a reduction. Based on that, small business with employees, I now can fill out this EZ. So that's kind of, when you look at it, it appears to be there are 3 rules, and there are. But one's if you have no employees. But rule 2 and 3 is if you do have employees, then they wanted you to keep them employed and not reduce their wages. What I like to try to do, and before I go into actually looking at the form, I want to say work with your banks because we have several clients, 40 or 50 small businesses that we are doing consulting on filling out the forms. Some of them are on the easy, some of them are on the long form. But the one thing I will say, it's the old saying, no two brains think alike, no two financial institutions think alike. So some of them have portals where you go online, like the form we're going to look at. You just fill it out. Others, you send in the form. Some of them want the documentation at the time you apply for the debt forgiveness. Others say just keep it. So at this point in the presentation, one, I've gave you the 3 things we need to qualify to fill out the form. And then secondly is work with your banks. And the other thing I want to say is we have found that we've got some of our clients that don't qualify for this EZ please, if you're a small business and you have had changes in full-time equivalents and you have had reduction in payroll, don't give up. Go to the presentation that we'll be doing on what I call the 3508 form. It's not the EZ. It's several pages. We'll walk you through it at that point in time. So let's kind of go to the application. And looking here at the application, I'm going to use my pen here and kind of go down through. First, you got to put in the name. And this address, actually, if you go online and look it up, it's the address of the firm. But this is not actually a live application, but it's very similar to some of the applications that we have done. So you're going to put your business name, and be sure that name is the same name that's on the loan application. You know, and it sounds crazy, but sometimes it happens. It's got to be the same name. Then you're going to put the business ID number, the business phone number, primary contact, and email address. As we move on down the page, we're going to have the SBA PPP loan number. That was on the SB application, and you'll have a number there. Here it's 12345. Then we're going to have the lender, the financial institution you're working with. You're going to have a loan number there, and in this case, again, it's 12345 in our example. Then you're going to put the loan amount here. In this case, it's $60,778. Then you're going to put in the date of that disbursement. Now, I'm going to stop here on this. It's 4/8/2020. At this point in time, that started the clock running on either our 8-week or a 24-week. Now, what does that mean? And I'll go back to my office. When the original act happened, you had 8 weeks to spend 2.5 months of money. So when we got to 8 weeks, we actually had qualified because we had kept the same full-time equivalents and we had spent the money on payroll, mortgage, rent, utilities, and qualified expenses. But when they came out with the second program, which moved it, you could either then use the 8 or the 24. So if you got the PPP in the first group, the first application, then you can choose either 8 or 24. If it was in the second, you have 24 weeks to spend your money in. So this line here is what starts the clock running on whether it's the 8-week period or the 24-week period. But the 24-week period cannot go beyond December 31st. Now, here's the next thing. Here's the only time in this application that it refers to employees. Employees at the time of loan application 6, employees at the time of the forgiveness application 6. Again, I had employees, but there was no reduction in the full-time equivalents. So we had 6 employees on April 8th. And in our case, 8 weeks later, we had 6, and 24 weeks later, we had 6. So we could have qualified under either threshold. Next line is EIDL. This was a confusing line, or this was a confusing amount when these programs first started. This here is the EIDL. You got $1,000 per employee. Well, on that program, you got the $1,000, and you didn't have to file an application for forgiveness of debt. But if you filed for it, then what happened was that, and you also filed for the PPP, they're not going to let you have both on the same payroll. So in this case, or the same expenses. So in this case, they're going to include that in as part of the amount of money that you received potentially for loan forgiveness. And if you did make that application, you're then going to put that application number in here. Payroll schedule, pretty straightforward. How do you make payroll? In this case, it was twice a month. Now, we're going to go on down the form, covered period. Again, because up here in the PPP loan date, the disbursement date, that started the clock running. So in that case, we put in 4/8/2020. And this, we're putting 9/23/2020. That's kind of like today. So we put in here the 24-week period. But in my actual application, it could have had 4/8/2020, and we could have went with the 8-week period, and we'd have put in an 8-week period. What does that mean is when we get down here to the expense area, these expenses in this case is saying this is what we spent. There were qualified expenses in the 24-week period, but had we put in here the 8-week period, then the expenses would have reflected accordingly. So that's the covered period. That's the period you had to spend your money, is another way to say it. Now we go to the next line, the alternative payroll covered period, if applicable. In this case, we went on ahead and put in the example, a date. Now, in the actual application, you would either have dates in the covered period or dates in the alternative period, but not both. Okay? So please, if, for example, I'll just mark on this, if I was going to use the alternative period, then there would have been nothing in this line. Let's define what the alternative period was. Whenever this bill originally passed, the 8-week period started on the date of the disbursement. But that wasn't always, that date was not the same date as the payroll period. So the alternative period is, in this case, because we were twice a month, 4/8 was in the middle of our pay period. Our next pay period was 4/16. So if we wanted it to be in the alternative pay covered period, which started on the date of our pay period, then we would do 4/16. So kind of the flexibility of the program. So I think that's very important, and yet it's a little confusing. So covered period is the date the loan was actually dispersed. The alternative period is when you're going to use it based on the next payroll period start date. So it maybe helps you to track it a little better. Now, if the borrower, if it's over $2 million, then you need to check here. At this point in time, we've kind of filled out all the forms. We've decided what period our expenses are covered in. And then what we're going to look at is we're going to then go on down to our forgiveness amount calculation. So line 1 is going to be our payroll cost. Now, you're going to put a number in here. And as I mentioned earlier, work with your banks because some banks will want the documentation there. And so what we've been doing for our clients is we've been, whatever period they've elected, we've actually printed out and saved the payroll cost. Now, at the bottom of the screen, what you're going to see is a link to what all's included in the definition. I know we've done some prior YouTubes on this, but because we're at this point in time, this is a short form, we're going to attach help you through what's the definition of payroll cost. We're going to help you with what's business mortgage. So we're going to help you kind of recap these expenses. And then we're also going to tell you what documents you're going to need to do for your financial institution. So if you look at below, there'll be a link there. That way we're separating the two. We're really just focusing on filling out the form. So the actual payroll cost here was $68,192. There was no mortgage payments because they rented, so they had rent or lease payments of $78,000. And in this case, here's an important thing, line 4, there was business utility payments. It's blank. Why was it blank? In this case, we had enough expenses to cover, so there was nothing put there. So there is no requirement that you have to put all expenses. You have to put enough to cover the debt forgiveness. So you may see one application. In this case, they would have these same numbers, but they would have something there for the utility payment. That's okay. That's okay. But the reason why we left that blank was to draw the attention of you just have to have enough expenses down through here to cover. Now, probably if you looked at our application for our forgiveness, we probably put every dime on here we could, okay? But some of the question would be still coming back to another video I did on that the IRS in Notice 2020-32, below you'll see a video link to that, was the fact that if you use an expense to cover the debt forgiveness, under IRS law, we can't deduct that expense. And that's what the law is, unless between now and filing season, the IRS comes out with something different than, again, Notice 2020-32. And I hate using numbers like that, but that allows you to Google and get that or go to the video link below. Now let's go on ahead and move down to potential forgiveness amount on line 5. We're going to add lines 1, 2, 3, and 4 for $146,192. The PPP loan amount should agree here is $60,278, and if we go all the way back up to the top of the application here, it matches. So the number that's here is the number here. All right? Payroll cost, 60% of line 1. So we're going to take 60% of this, and what's going to happen is that we're going to end up with 60%, and the debt forgiveness is entered the smaller of line 5, 6, or 7. Line 5 is add the amount of 146, PPP loan amount, and payroll cost is 60%, and the resulting amount is a PPP loan amount. So as you can see, there'll be total debt forgiveness. So in conclusion, you can see this is pretty straightforward. You got to have all your information. And I hope this walkthrough helps. Again, we're going to have another video on what it actually is the definition of payroll, mortgage, rent as a recap from a prior video. And we'll also talk to you about what documents are necessary. Please subscribe. And again, hope this helps. Have a great one.